Though first, we have a case study on machine learning and enabling new products with a focus particularly on traditionally underserved people. Just as a quick show of hands here, who works in financial services? A few people. Who here works in tech? Mainly tech, okay. Who here works in government, healthcare, the social sector? Cool, all right, so I would say that's like maybe a third or so. The case study that I'm going to present today comes from fintech. I work for a certified B Corp, but I think the framework has larger applicability to other sectors as well. A bit about me, my name is Mack Wallace. My passion is the use of data and technology to expand financial opportunity for more people. And my career in financial services has been a bit more non-traditional. I started and was a financial regulator for many years at the Consumer Financial Protection Bureau. I was a policy advisor at Aspen before making my way over to fintech, where I focus now on building inclusive financial products. Having been around and observed working across the financial system in a few different sectors, I've noticed a few things. So in particular, we need more focus on enabling opportunity for more people. And the financial system falls short in many respects. This came from a recent paper that I published here, published at the Aspen Institute. And there's no shortage of ways in which our financial system currently falls short. If you're high income, it works well, but if you're low income, live in a rural community, a member of a racial or ethnic minority, chances are you face one of these 7 gaps, ranging from affordability to bias, invisibility, and just inequities that have accumulated over time in our financial system. So these gaps are very real, and the innovations and solutions that we need are also very real. And that's the case study that I want to share today around how we all play a small little role at chipping away at these inequities and these inequalities that exist. So this is what I want to do. I want to share a case study around and share an example of how we have used data and machine learning in a novel way to expand the ability to serve more people, and hoping to impart that today with you. So let's dive in. A bit about MPOWER. We are a leader in student financing for international and DACA students. We work with many universities across the US and Canada. We've won many accolades in the last few years from industry publications like the American Banker, US News, NerdWallet, and so on. And as I mentioned, we are a social enterprise incorporated as a public benefit corporation and a certified B Corp. And our mission is around enabling high promise global citizens to further their academic and financial aspirations, because we believe that socioeconomic mobility should be accessible to everyone. So we do that in large part through data, technology, and financial services. So these are some use cases that we are using throughout our enterprise to enable better customer and business outcomes. So from left to right here, you see the customer life cycle, more or less beginning from marketing and ending with account management. So in marketing, we apply ad and marketing models, more of a machine learning quantitative sense. New over the last year has been a lot of the innovations in generative AI. We own about 60 or so web domains, and so we're using a lot of generative AI tools to manage new domains and actually overhaul and rewrite the websites that we own with SEO in mind. Onto verification. As a financial services provider, a lot of these things are quite classical, ranging from ID verification, document extraction, and so on within our credit model. And I also think if you're just starting on the journey of machine learning, there's a lot of high value, low lift in propensity modeling, just figuring out who is most likely to convert, churn, and so on. So this is where we're using machine learning across our company today. And I want to share with you where we are in terms of our business results and the impact that we've been able to achieve from a business perspective and for our customers. So from a business perspective, we are 100% digital. We are a global platform, and we serve international students in over 190 countries, which is quite something to achieve as a small little startup like us. Over time, through better data and analytics, we've been able to reach more customers. So we've been able to increase our approval rates over time with constant risk. And when you compare us to the industry behemoths in our industry, like Sallie Mae or others, we consistently beat them in terms of credit losses. And we've been able to do this through data and analytics. What I'm most proud of, though, is our customer impact. So we provide a service that is having very real impact on real people. Nearly half of our customers belong to low and moderate income households. Nearly half are first-generation college students. 90% plus say that without our financing, they could not have finished their degree. And many of the customers that come to us have no prior credit history. So the majority of them are able to establish a prime credit history here within a year of starting to work with us, which is then a on-ramp to rental guarantees and all the other things that a credit score in the United States are used for. So going back to this, I want to focus specifically on how we're using it within credit, because I think that is where we are unlocking the greatest opportunity for people. So this is a classic prediction problem. I'm giving the example of financial services, but I think has broad applicability to many sectors. The traditional prediction problem in credit goes something like this, where you look at someone's past behavior and data and credit history in order to predict the future. Simple enough, yeah? However, this traditional approach breaks down in a few key areas. For one, people without data can't be predicted. So about 45 million people in the United States, for example, don't have a credit score, either because they don't have a credit report or they lack a sufficiently thick credit file to have a score generated on them. You can think about that in other data sets, though. Who isn't represented in those data sets? Second, historical data contains systemic bias. It's well documented that FICO and credit scores are inherently biased, but nothing better exists. Third, messy, erroneous, and inaccuracies within the data. Credit data is among the most regulated in the country, if not the world, and reports still show about 1 in 4 credit reports contain inaccuracies. If that's what credit data looks like, only imagine what other data sets might look like as well. So for all of these reasons, the traditional prediction problem of using past data to predict the future can break down, particularly in our use case around extending credit to young international or DACA students who are looking to attend higher education. So what do? What if there's a different way to approach solving this prediction problem? And this is the inspiration that I want to leave you all with today. So let's use this example again. So what we do is we look to the future to predict from the present. So we use the future rather than the past. So using this framework again, someone has no or little data available. What do? Well, you can look at people's actual outcomes in the future and compare it to the present. And so in machine learning speak, would be something like a lookalike analysis. Who are the people in the future who look like the person who's coming to you at the present, and what were the range of outcomes that happen at a person, and what are the probabilities associated with that? So I think it makes it becomes a little bit more real with an example. So this is Rosa. She is a DACA recipient. So she came here as a child and grew up here in the United States. And she doesn't have access to a lot of the traditional tools that US citizens have to attend higher education. So it's hard to get funding from Uncle Sam, the Department of Education, and get a federal student loan. It's hard to go to a bank and get a loan for a school. Coupled with that, she has no credit history. So even if someone was willing to lend to her, what would they actually look at? So in this instance, no past data is available. So what we're going to do is actually look to the future. What are the range of outcomes and the weighted probabilities associated thereof? And based on that information and what we are able to glean from that data, we underwrite someone today based on what we predict in the future related to the cash flows and to their income. So what this means in terms of the actual modeling is we prioritize signals and variables and data sets where we seek to measure the future rather than measuring the past. So rather than looking at traditional credit variables, for example, which are often lacking in the population that we work in, we try to look at the future to anticipate who they might become, who do they look like today of people that we know in the future do have credit history, for example. So we look at things like predicted salary outcomes validated with actual ones, their academic record. There's a whole host of, a ton of publicly available data that the government and private sector publishes related to universities and salaries. LinkedIn, for example, is a great resource and source of data, and comparing that to the cost of the program. So these are some of the signals that we prioritize here. I'll go through the model development process on a high level, depending on the level of business or technical knowledge we have in the room. We look at the data inputs, so a combination of public and proprietary data. So as I mentioned, the government is a rich source of data, as are those in the private sector on income, for example. And we look at the proprietary data that we have related to salary and actual customers in our portfolio. We conduct exploratory data analysis. We really try to understand what's going on here. We build the model, we test it, and we validate it and analyze it. In our business, and having been a former financial regulator, being compliant is really important. So being able to prove that you aren't, for example, containing bias in your model for fair lending purposes, that your decisions are explainable to the end user, and that you have business confidence in that model. I'll just share a few tips and things that we learned, and you can go through as well in the exploratory data analysis. So when I joined my company, MPOWER, I was very new to this kind of method and this framework that we've generated. And so when I was going through the exploratory data analysis with my team, there are some surprising insights that we discovered. So for example, there are non-obvious relationships in the data. So we found, for example, loan amount is not predictive of risk. So a person that takes $10,000 versus $50,000 versus $100,000 is not indicative of the level of risk, which was counterintuitive to what I had been trained on and what I thought. What is indicative is the ratio of that to the cost of the program, or the ratio of that to their current income, or the ratio of that to their future income. So in the feature engineering process, those kinds of insights were really valuable and important. Nonlinear relationships. People working in data sets know this all the time. For us, the big surprise was test scores. Really high test scores, super indicative, and then it plateaus, and it really drops off from there. And the company that I used to work for would generate models with thousands of attributes in it. And for us, the level of complexity that we need isn't thousands of attributes. And indeed, applying the 80-20 here, a short list of variables is probably going to drive the bulk of your predictive value. The key here, though, is particularly when you're exploring new data sets, you may not know what those are in advance, and I think that's why exploratory data analysis is so valuable and so important. Yep. Cool. So for us, real-time decisioning and real-time outcomes on our model are super important. So we weighed the complexity of the model as compared to model latency. We want to be able to return a decision in about 3 seconds or so. And interpretability is really important. I have to be able to explain the decisions of a model to our frontline staff who are explaining it to our customers. Also, to auditors, our regulators, and so on. So a medium ground in terms of interpretability and something that everyone understands is really important. Going back to the optimal mix of complexity and predictive power, as we've grown in sophistication and we've grown over time, so has the sophistication of our underwriting system. And I think iterations are okay. I think right out of the gate, you don't need to be perfect, and that you can build and get to better over time. And we take this in an annual cycle, constantly striving to improve and add more data and variables to our process. So as we wrap up this session and as we wrap up the first full day of AI4 conference, whether it's something in this session or another session, I want to leave you with 3 key questions here for you to jot down and think on today and as you go home over the next week. So 1, can you think on how to approach a customer problem in a new way? So we took a step back in my company, as I mentioned, and really thought through, given the data that is available today, how might we approach this problem from a totally different vantage and perspective. So how can you, are there novel ways that you can set up your modeling that would glean new insight? Question 2, are there new data sources, whether you're sitting on them or publicly available, that you can explore, that you can add to your models to benefit new types of customers, especially those that are traditionally underserved or excluded? A lot of our current data sets and models might have blind spots as it relates to new customers. So what are the new data sources, the new ways that you need to approach it in order to serve those people? And then the third question is there a POC, a proof of concept, a test, something else that you can run with your team in a short iteration to glean new insight, to serve a new customer segment or a new population? So this is what I'll leave you with. Let's continue the conversation. This is a QR code to my LinkedIn. I'm super excited about inclusive financial services and the future here. So thank you for having me here at AI4. I'll stick around probably over here for questions. Or do I have time for some audience questions?
Yeah, 4 minutes.
Okay, yeah, if there's an audience question or two, I'm happy to take them now.